Hey everybody, it's your boy Jaluski, aka Lusky Lou, aka Lusky with the Lou, and I want to welcome you back to my channel. Now, in this video, I'm basically going to be giving you the 10 steps to becoming a day trader. Going to be going over in a little bit of detail about what each step consists of and what is required of those steps.
Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you. Come along and see.
I hope you guys watched the previous 3 videos in order to know what's going on in this video. And also, I hope that you carefully digested the content that was in those videos and did your own research as well. You've probably heard over the past 3 videos, and you will hear it again, that knowledge, skills, and traits, as well as a commitment to a lifestyle, a specific lifestyle, are all a requirement of a day trader. Now, let me ask you a couple questions. Are you full of financial knowledge? How's your mathematical analysis? Basic algebra? Are you well aware of behavioral psychology? Basically, seriously, on all serious note, serious question is, are you ready to take on a role of an entrepreneur? That's really the question. And I ask this because day trading requires long hours, continuous self-learning with no guidance, risk-taking abilities, and a never-ending commitment to daily activities of the job. And in my previous video, some of these activities include, but not limited to, looking at news, following the news, plotting on charts, doing technical analysis. These are all daily activities. So basically, the 10 steps I'm going to give you in this video, follow it, and before you know it, you'll be on your way to becoming a profitable day trader. Step number 1, the right mindset. So in today's world, with the internet and all the free information that we can access in the palm of our hands, why only very few succeed at day trading? I mean, after all, right? What investor has not dreamed of becoming a day trader? With perks such as working comfortably at a home computer or your laptop or anywhere in the world as long as there is internet. You can also be your own boss. Watch profits roll in, eventually become your own bank. So while many aspire, very few actually succeed. Now, for a quick review, a day trader is one who actually buy and sell securities, often multiple times within the same trading day, but does not carry any open positions to the next day. Now, although there are times where you might carry a position into the next trading day, then it becomes a swing trade, not a day trade. So day traders differ from investors who invest for multiple days or long periods. Day traders also use leverage to increase their intraday trade exposure. So in other words, they may use leverage to gain more money or in order to be able to buy more shares. So those are the benefits of using leverage. So as being the first and most important requirement of having the right mindset, what I'm doing right now is helping you with your self-assessment, right? Unless you are prepared to devote time, self-learning, and be mentally prepared to take risk and suffer losses, do not try to day trade. I'm not going to say it again. Step number 2, arrange sufficient capital. Now, the statement, no one can generate profits consistently, had to be said and taken very carefully. I say this because while intermittent and extended losses are part of the day trading game, you are still able to be consistently profitable over a time period. If your wins are greater than your losses, that's all that matters, right? Win more than you lose, to sum it all up. So you may be asking, what does that mean? Here's a quick example of that. So a day trader may execute 4 losing trades in a row, right? A day trader may execute 4 losing trades in a row and recover with a profit trade on the next 6 trades or vice versa, right? To handle those risks, a day trader must have a sufficient cushion of capital, or as I should say, money you don't mind losing. The capital cushion may differ for each of us. It could be $500, it could be $1,000, or it can even be $100,000. For some people, maybe even more. Like I said, for everybody, it differs. That's a decision you have to make based on your financial financial situation. It doesn't mean that you would need $100,000 to start out trading, although with a starting capital so big, you would be in a good position against the rest of the market. You can start with as little as $100 or maybe even $50. When I first started out trading, I funded my trading account with $800 and grew it day by day. Step number 3, understand the market that you are in. I will continue to stress the importance of a need of a solid foundation of knowledge about how the market functions. Simple details like trading hours to complex details like the impact of news events, allowed tradable instruments, and margin requirements can all play a key important part in your trading strategy. If you understand what moves the market, it creates an edge for you over the rest of the market. Step number 4, understand the securities to trade. Stocks, futures, options, exchange traded funds, also known as ETFs, and mutual funds are all differently traded instruments. Executing a trade or initiating a trade strategy without a clear understanding of a security's characteristics can lead to failure. For example, as a trader, if you're trading options, you should know how it is traded relative to the underlying stock, or how profits are calculated different from the stock's actual shares. You should also know how margin requirements for futures, options, and commodities significantly impact trading capital. Lack of knowledge about the specifics to securities can lead to losses. So, as an aspiring trader, ensure that you are fully familiar with your select trading security. Step 5, select or design a suitable trading strategy. Novice traders entering the world of trading should begin by selecting at least 2 established trading strategies. Whether it be swing trading or buying rumors and selling the news, it is your duty to fine-tune your skills and make adjustments to your strategy. If you learn and develop at least 2 trading strategies, they can act as a backup of each other in case of failure or lack of trading opportunities. After you have solidified yourself with at least 2 trading strategies, you can then move on to more strategies with more complexity later as your experience builds up. Now, the world of trading is highly dynamic. Your strategy can consistently make lots of money for a long time, but then fail literally at any time. In the middle of a trade, it can literally fail you. So keep an eye on the effectiveness of a selected trading strategy, customize, dump, or substitute it depending on the development. Step number 6, integrate the trading strategy into the larger trading plan. I know in the previous step we talked about selecting the right trading strategy. It is not sufficient alone by selecting the right trading strategies in order to succeed in the markets. When you have decided upon your strategy, you need to consider the following to complement that strategy and create a trade plan. Step number 7, understand and practice money management. So let's say you have $1,000 in trading capital and an excellent trading strategy and plan that offers a 70% success rate. So that means 7 out of every 10 trades are profitable, right? So how much should you spend on your first trade? What if your average record of 7 out of 10 trades no longer holds? Money management helps you address these challenges. Effective money management can help you win even if there are only 4 profitable trades out of the 10. Practice, plan, and structure your trades according to a money management plan. You might be asking, what is trading capital? But trading capital is basically another word for a financial asset or their financial value, or simply money you'll be using to trade. And money management, it's basically the process of budgeting, saving, investing, spending, or otherwise overseeing the capital usage of an individual or group. Step number 8, brokerage charges. When you are a day trader, there will be tons of frequent transactions, which results in high brokerage costs. This, however, is no longer the case because there are a lot of brokerage firms that offer zero commission trading or very low commission trading. Just to name a few again, we have Robinhood, they offer zero commission trading. Webull also offers zero commission trading. TD Ameritrade offers zero commission trading. However, you do have to pay 60 cents per contract if you are trading options. And other brokerages such as E-Trade also offer commission-free trading, but I do believe you have to pay for the contracts. Remember, brokers charge a fee, whether it is a commission fee or a transaction fee to wire money to or from your personal bank account. Then there are some brokerage who don't charge anything to make a single transaction. As stated before, it is your preference of broker for you to choose. Some people choose different brokers for different reasons, mostly because which one costs less to execute transactions. After thorough research, select the broker and brokerage plan wisely. Apart from trade execution, a broker also offers other trading utilities, which includes trading platforms and software, historical data, research tools, trading alerts, news alerts, chart applications, along with technical indicators and more features. Some of these features may be free, while some come at a cost. To prevent expenses from cutting into your profit, it is best for you to avoid subscribing to features that isn't necessary to your trading needs. Start with the free low-cost brokerage packages, and later you can always opt for an upgrade when needed. Step number 9. Stimulate or backtest on historical data. Once your plan is ready, the best advice I can give you is to practice and simulate on a test or demo account. These accounts come with virtual or paper money and is provided by most brokerage to its users for free. As an alternative, you can test your strategy on historical data. You can look at the historical charts and past performances to see how these assets perform. For a realistic assessment, consider brokerage costs, commissions, or any subscription fees of various utilities. We made it to step number 10. Start small, then expand. You never want to bite off more than you can chew. Crawl before you walk. Even if you have sufficient capital and experience, don't play big on your first trades of a new strategy. Try new strategies with small amounts of capital and then gradually increase the stakes after success. Remember, the markets and trading opportunities will be forever, but money once gone may be very difficult to reaccumulate. The goal here is to grow your account every day with every trading opportunity. Now, I'm not saying that it is not possible or probable that your life can't change overnight or in the course of a day, but don't let that and the profits of other traders blind you or make you feel like you're not making enough money. Most traders lose sight of their plan when swinging for the fences. So here's the bottom line. As I stated in the very beginning of this video series, you should be aware of websites and courses that promises foolproof day trading success or endless profits. By investing your time and efforts into gaining the right teachings and knowledge, like watching this video series, you'll start to build your own trading strategy, and by following them religiously, you can become part of the limited percentage of day traders who are actually successful. As a day trader, you are in this big trading world on your own. You have no friends, no teams when executing a trade. This is a zero-sum game, so when you win, someone else loses, and vice versa. So before you quit your job to become a full-time day trader, be sure that you have the motivation to continuously learn, design your own trading strategies, and take accountability for your decisions and actions. Remember to start small, test to establish, then go for the big ones. All right, everybody, I appreciate your time here again for the fourth and final part of the video series of what is day trading and is it for you. Don't forget to like and subscribe. Don't forget to turn on your post notifications for when new videos and educational content drop, so you can stay educated and stay on top of your game, so you can become a better investor and better day trader.
Yo, I ain't here for the money.